Juerg, I do want to get your sense in on where do you see the 2023 year-end target for gold?
Look, I don't really know where the year-end target is, but the market right now, from a physical tightness, looks very similar to the market we had in 2001 and 2008. And in 2001, the market didn't just move 20 or 30%, it moved up a lot. The same in 2008, when we had actually as well a sell-off in the market, and then the stimulus coming back in, and we had a move where gold went from $600 to $1,800 in no time. So I think we have a very good chance that we see a major move. It's not going to be just 10 or 20%. I think I'm looking at a move which will really make new highs.
Crossing previous highs?
New all-time highs, and that actually, to a large extent, much higher than what people think. I think it will get really stretched.
Right. I would still want to understand what would that mean from a pricing perspective, because numbers are important, right? So when you're saying it go past 2,100, 2,200 on gold?
Look, you can easily see somewhere priced between $2,500 and $4,000 being reached sometimes during next year.
Driven by demand, do you think that can come from India and China especially?
I think if you look, it's not just China, it's the whole East, which has actually been accumulating precious metals. All the central banks are accumulating precious metals. And the Bank of International Settlement has been removing itself from the loan business to the market, which means that actually the people in the know are leaving the funding capability and the supply of physical gold in the market. The exchange for physical is incredibly tight. Wherever you look, there's hardly any physical available in size. And if you look at size delivery, you have 2 to 3 months delivery time. That tells you the market is tight. When the market is tight, your outstanding positions are under pressure. So your short positions in the market are massive. You don't need very much to move that market.